Hello, everybody. Welcome to Thursday. The S&P 500 was up a little bit more than 0.8% today. Good day altogether, ironically driven by a weaker job market. So the ADP report came out. This is private payrolls, had less jobs than expected that were created for the month of August. We ended up with higher unemployment claims, weekly unemployment claims than we've had since June. This combined with, the labor report that we got last month with all the revisions. And of course, the big labor report comes out tomorrow morning. They fired the person that was kind of in charge of doing that. So it'll be interesting to see how the market reacts to the number that comes out of, the government stating how many jobs overall were created in these public companies. It's a pretty well watched report. But what we already have is probably enough to show the Federal Reserve that they can do a rate cut here in September, probably can do another one in October. I think there's room for some rate cuts here. I think that the possibility of high inflation when you have a deteriorating economy is lower, and the inflation is mainly being caused by tariffs as far as that goes. So, when you look at kind of what's going on here, the market is excited about the fact that they're going to have rate cuts, but you got to be careful what you wish for. If you look back at history, so for example, in 23 and 24, the rate inflation's coming down, and so they start to lower the rates, which makes some sense. The economy's still good. Those were really good time frames to lower rates. The market did more than 20% in both of those years with that happening. Here we are again, we're lowering rates, but now we're lowering rates because we're seeing deterioration. We're seeing some increasing prices. We're seeing possible global instability with the tariffs, deportations, all these different things and threatening the Fed's independence and et cetera. And so, now things start to slow down. They're lowering rates, and better be careful. Don't get too excited because it could be that there's a reason that they need to do it if the labor market continues to deteriorate. So we'll see. The economy is pretty strong overall. There's lots of pieces that are doing quite well. Might be able to kind of keep things rolling as far as that goes. But back in 2007, they were lowering rates because things were starting to soften up, and it turned into this huge downturn. And that's the concern. That's why people like Jamie Dimon and such are running around talking about this, because you never know what's going to happen. Even a small slowdown could trigger something, that happens like private credit defaults or whatever along those lines. So this is where we have to be a little bit careful with what's going on. However, again, market just hit an all-time high. I think that's a good thing as far as that goes. Gives some room for the market to come down if it does need to come down. We're in September, which is, the softest month of the year on average, and still doing okay as far as that goes. So, we'll see what happens tomorrow. I'll be very interested to see how the market reacts to the labor report with the new person now in charge of the department that comes up with these numbers as far as that goes. So again, we have the show tomorrow, Talk Money with Tom. It's live from 12:15 to 1 Pacific time. You can find it on YouTube. If you want to join us and ask questions, that'd be great. And I spend the first part of the show, covering a summary of what I saw happening with the market. And we'll talk about that jobs report then too. So anyway, look forward to seeing you then, and we'll talk to you tomorrow. Thank you.